Hello, welcome back to Learn Oikonomia. Today we are going to discuss the concept of Pigouvian tax. Let's discuss. Moving to the concept of Pigouvian tax. The concept has been put forward by a person, Arthur Pigou. He is an English economist. So, the concept of Pigouvian tax plays a very important role when it comes to externality theory. And we have already said about externality concept. This would be something that can happen in two ways. Externality can be negative or positive. Okay. So when this particular tax, that is Pigouvian tax, is something that deals with negative externality. So this involves third party effects. This involves something called external cost. So Arthur Pigou has told that there should be something called a tax on negative externality so as to capture this external cost. So this tax is something that would be assessed against the private entities or some people or some producers or some consumers, whatever. This is for engaging in some activities that would be creating side effects. When we say side effects, we mean external cost. Okay, so these external costs actually are not included in the price of the commodity. And to give you some examples related to negative externality, it would be covering the pollution levels in the economy. It would be covering the strains that would be created on healthcare as a result of tobacco consumption. It will be covering something called passive smoking, etc. Okay. So moving to the exact idea of Pigouvian tax, this is something which is imposed on some economic activities that would be generating negative externality, as I've already told you. Okay, and these negative externalities would be creating some costs on some unrelated parties. Actually, these parties or these third parties, these people are not, or these entities are not related to the creation of negative externality. But what happens is that even though they are not, even though some people are not creating these negative externality, they bear the cost. They bear cost, and that is why you call it as externality. It involves some external effect. The effects would be bared by a person, or it should be borne by a person who is not related to the production of the very same thing. So this actually, moving to the very idea of externality, what we could see is that there will be two people to give you some externalities. So there can be two people in the economy, A and B. Okay, A might be doing something and this will be impacting B, and this can affect B either positively or negatively, for which B cannot say A that you are creating this much of cost to me, so you should give me this money, because this effect that A has created on B is something that cannot be priced. So here exists a situation of market failure as well. So there is a situation of market failure because the market fails to capture that cost into the price of the commodity. The cost which comes from negative externalities will not be reflected in the final cost of the product. That is a problem as a result of what is known as the market failure. But Pigouvian tax is something that we can impose so as to deal with problems like environmental pollution, congestion that we can have in roads, etc. So what here exactly happening is that whenever you go for a Pigouvian tax, this will be redistributing the money or the cost back to the producer who creates the concept of or who creates a situation of negative externality. There might be a factory and the factory owner would be engaging in production process, and he might as a result of the working of the factory there would be something called pollution. It can be of various types. It can be land pollution, it can be water pollution, it can be air pollution, it can be some other pollutions as well. So whenever this factory pollutes, this incurs a cost on society. And whenever you charge a tax on the producer of pollution, you can redistribute this cost from people to the producer. So that means you will be discouraging the activities which will be creating the cost on third parties. You will be discouraging the activities that creates negative externalities. Discourage activities that create negative externality. Okay. So as a result of the very same thing, you could see that you can attain some efficient level to an extent. I'm not saying that efficient level can be achieved with pollution. No, you will be reducing the level of pollution in the economy. And this negative externality will be preventing a market economy from reaching an equilibrium when producers do not take all the cost of production. Here, you know that producers will take into consideration only some cost like cost of raw materials. Then they will be considering the electricity cost. Then they will be considering the technology related aspect. GY. Technology, etc. So here what happens is that, etc. So what happens is as the cost on society or the cost on environment this is not being considered by a producer whenever he incurs a cost. Okay, so this cost should be considered, and in order to consider this cost we have to go for a tax that would be equivalent to the damage which has been created by the producer. So whenever you go for a tax, this will be reducing this cost on environment. And this negative externality, as I've told you, will be coming whenever an economic entity does not fully internalize a cost. As in the case of the factory would be working, the factory would be incurring some cost, it would be having some fixed cost, variable cost, it will incur some cost for raw materials, electricity, technology, the cost for labor, like the wages, all these are costs to the factory. But it doesn't consider the environmental costs that it is creating. And this cost will be borne by the society. It would be borne by the people who would be living in the residence, in the nearby area, in the nearby residence. So here what we do is that you are giving or you are imposing a tax on pollution. Okay. And here the polluter, as I've told you, will be dealing with all the other private costs, but he is not taking into consider this external cost. And with Pigouvian tax, we are making the producer to take into consideration the external cost as well. With Pigouvian tax, we make producer of external cost to bear that cost. Okay. Now, whenever there is these kind of external cost, this will lead to a situation of dead weight loss. And with dead weight loss, what happens is that the overall economic welfare would be reduced. The welfare of the economy would come down. And this will happen whenever the pollution happens beyond the socially optimal level. And here what you need is something called a state intervention. So the government should come here. Government should come in such a manner that it should impose a tax on the producer of this external effects or external cost. To give you some examples related to Pigouvian tax. So one of the famous example is called the carbon emission tax. This is mainly imposed on a company that will be burning fossil fuels. You know that whenever you burn fossil fuels, burning your fossil fuels will lead to generation of greenhouse gases. And whenever greenhouse gases are generated, this will lead to global warming. And whenever you have global warming, this will lead to climate change. And whenever you have climate change, this would be influencing your agriculture sector, all the other sectors very badly, which will be creating further problems. It will create natural disasters and so on. And here with the imposition of carbon emission tax, what we mean is to put an end to the production of some carbon products. Okay, so whenever you go for production of carbon products, it will be incurring an external cost to the whole economy. And we need to put an end to this. And that's why we go for something in the name of carbon emission tax. Another example is that in Europe, there was a tax which was imposed on plastic bags specifically. And you know that whenever you put plastic on ground, that will be creating problems in environment. It acts as a matter of pollution. Plastic creates pollution. Why? Because this is something which this is not biodegradable. And whenever you impose a tax on plastic bags, this would be encouraging people to bring their own bags, their own reusable bags instead of plastic bags. So plastic is also considered to be a byproduct of burning of fossil fuels, which will be damaging land, which will be damaging marine life, which would be damaging water bodies, etc. So this is something that has already happened in Europe. Next, you might have heard about something called sin goods or sin commodities. And these are certain commodities like alcohol, cigarettes, etc. So if you impose tax on alcohol, cigarettes, etc., that will be discouraging the behavior of consumption of these items. And you might have heard about something known as passive smoking. In the very beginning of the class, I was mentioning about the same. This involves a person will be smoking cigarettes in front of you. Okay, you will be standing in nearby to that person and he would be smoking cigarettes. And you could also see that you will be consuming or you will be inhaling the very same smoke which would be created by this person as a result of his smoking behavior. So when you inhale the smoke, this will damage your lungs. And whenever this damages your lungs, it will create some situation for you to have some lung diseases. So whenever you get some lung disease, that means you have to bear some extra cost to deal with the treatment of the same. You have to bear some extra cost to meet the treatment of the same. Again, you can consider the consumption of alcohol. When you consume alcohol, what happens is that it will be creating problems for, again, it is not only influencing the person who take alcohol, but also it will impact others negatively. A person who consumes alcohol, if he or she engages in driving, it might lead to accidents. And when there is accident, this will spoil the life of not only the person who has taken alcohol, but also it will be spoiling the life of some other people as well. Again, all the instances we have considered so far will show the examples of negative externalities. That means the price of the commodity, whether the alcohol or cigarettes or all the other instances like factory production, etc., these are not taking into consideration the cost that it incurs on the society. But when you impose a tax on the very same, it will be the price of the commodity will be capturing the cost. So here you are enabling the price to capture the external cost. Okay, and here you could see that you are redistributing the cost. You are redistributing the cost to the producer. So producer who generates the externality, the negative externality, will be bearing the cost. He has to take the cost as per the new tax. Now moving to the pros and cons of this, we could see that whenever you impose a Pigouvian tax, it will be reducing the negative externality because you are trying to impose a tax on the activity that is creating the negative externality, isn't it? So for the very same reason, when you impose a money value on the very same thing or money cost on the very same thing, that will lead to the discouraging behavior. It will be discouraging the behavior of the party who is involved in the creation of negative externality. Again, when such a thing happens, it will be promoting the social welfare as well as efficiency in the economy. Also, whenever you go for a new tax will be increasing the revenue of the government. That doesn't mean that the concept of Pigouvian taxation is free from limitation. It has got so many limitations. One of the basic limitations with respect to this is that it is very difficult to calculate the cost properly. You cannot go for the calculation of external cost by taking into consideration all the external costs, and it is something that is almost impossible to quantify this external cost. There are certain things which are beyond quantification. Also, at certain times, even though Pigouvian tax is considered to be an efficient method, in certain other times it becomes inefficient. And also it's very difficult to get data, information, etc. related to external cost. For the very same reason, you consider it as a costly method to go for Pigouvian tax calculation. Sometimes it acts as something which is regressive as well. And what is regressive tax? A regressive tax is a tax which falls more on the shoulders of the poor people. So here there is something, you could see a high cost imposed on lower income category. And also as a result of Pigouvian tax introduction, you could see so many protests, and these protests would be coming especially from the corporate lobbies, because they don't want these kind of tax if they are producing some items like alcohol, cigarettes, etc. So that's all about the Pigouvian tax concept. Thank you for watching. You can like, share and subscribe to this channel for more video, and you can be a part of my Telegram community. I'll to have some discussions. I'll be providing the link of the very same in the description box. Also, you can download the Learn Oikonomia app. For that also, I'll be providing the link of the very same in the description box. That's all about today. Thank you for watching, and like, share and subscribe this channel for more videos.